Okay, I believe you can hear me now. I think I did not mute my mic. Sorry about that. Now I'm back. Welcome back to Smart Analyst Global. Uh, we are at the free, today is the second day of the free trading bootcamp, right? And I'm going to be talking more about my experience, about things I've learned in the space, things I'm going to be learning that I've learned in the space, mistake I've made. Yeah, mistake I've made. Thank you for the feedback. Thank you for the feedback. Yes, I've unmuted. Thank you. So, mistake I've made in the space and how I've overcome them and things I've learned. And you're going to also be getting access to the tools you can use in trading. You can use investment, right? And you're also going to be, today we're going to be talking about uh, things that's going to help you become a better investor and a profitable investor and profitable trader, basically. And like I said, I've made a lot of mistakes over the last 10, 11 years of investing and trading. And what I'm trying to do is basically share that information with you and help you to become a better trader yourself and better investor, much more better than me, actually. So my goal, excuse me, my goal for the Smart Analyst Global community is for everybody to be independent, right? You don't have to depend on me to know how to trade. You don't have to depend on me to trade for you, or you don't even have to give people your money to trade for you, or depend on signals, right? You have all it takes for you to become a profitable trader. That is the goal, and that is what this session is all about. That's what it's all about. Okay, so day two, we're going to be talking about where to make money and why you probably should invest in some countries' assets. And because I'm only going to be doing it for Nigeria and the US dollars, right? Based on the returns that you can actually make from those markets. So that's basically what I'm going to be doing. I'm going to be doing based on the return you can make from this market. So, okay, okay, good. Based on the return you can make from this market, and that will help you to arm yourself with better knowledge. Like I said, it's not about having wisdom, it's not about having understanding, it's not about having information, it's about applying them. So if you have an information, if you have a knowledge about something and you don't apply them, you're not different from somebody that did not even have understanding at all, right? So that is very, very important. You need to have clarity about what you need to do. And you remember what I said yesterday? Let's go to what we discussed yesterday. Yesterday, oh, what am I saying? Okay. There is an error in a slide. Okay, good. So yesterday, I discussed about I discussed about the mindset. I mean, giving you details about mindset shift, what you should know about the market, what you should understand about investment and trading, right? We talked about fundamental mindset. We talked about the mistake people make, a mistake I believe everybody has made, even myself have made. And we talked about the how to fix those mistakes. I gave you three fundamentals on how to be a successful trader and investor. Then we talked about STIC psychology. STIC actually stands for Smart Trading and Investment Companion. It's our proprietary tool in the Smart Analyst Global community, which you can actually use for trading. We're going to be talking about that and giving you access, giving free access to everybody on the call to tap into it. And for others, and also please join our in the description of this video. You should have seen our Telegram community, right? Kindly join, and that is where you're going to be seeing, getting feedback, live feedback, active, quick response to your questions and messages. We have a community managers there. They're doing a very, very great job, and they will be able to respond to you. And I'm also going to be there to respond to you actively. So, jumping to today's topic, what are we going to be covering? Uh, my slide is actually messed up right now. That's strange. I'm saying something. Okay. So talking about today, what are we talking about today? What are you going to be learning today, right? We Our goal for today is actually to help you see clearer, know where to invest, and set up your trading tools, right? See the market clearer. Basically, if you understand As an investor, as a long-term investor, as a passive investor, and as an active trader, there's one thing that's very, very important for all of us to know, which is charts, fundamental analysis. We have different kind of analysis. You can do fundamental technical analysis or function analysis. It's all about converting information and emotion, interpreting information and emotion into price action. That is basically the outcome. Either fundamental, either horoscopic, either on-chain, either technical analysis, and several other analysis you can do. It's all about converting an information or data or emotions, sentiment into price action. That is the goal. So we're going to be talking about understanding investment better, at least why you should probably invest in certain markets in Nigeria or US, which is better, investing in Nigeria or investing in US. You want to know which one is better, right? So we're going to be talking about that, and we're also going to give you insight on how to understand the charts within 10 minutes, and after that, how you can easily read the chart within 60 seconds, just 1 minute to be able to read the charts and set up your trades, right? We're going to be discussing that in details. So up to the next one. No, that's the wrong screen. Okay, so where to make money? It is very, very important to understand. Okay, I think I should go. I should go with this first. Okay, yeah. So let's just talk about this. Uh-oh, my picture is covering this. So, uh, where are the places to make money? I listed some places here. I listed Bamboo. I listed invest Arin invest Arin invest, right? I listed um, Zen Finance, right? I listed Zen Finance. I listed Binance. I listed Bybit and BitMEX and several other ones, right? So those are a few places you can make money. But why should you use those places? And what determines where you invest or where you trade? So understanding Bamboo basically is, if you want to invest, you want to buy stock. Both we have high risk, low risk, and medium risk stock. You can use Bamboo. I think we're going to be sharing the links to actually get access to that onto most of this platform are available on our Telegram community, right? So if you check our Telegram community, the link to access them are currently there. You can check it out. So you can create a free account with on this platform. We have for Bamboo, we have for Rights Invest, Arin Invest. I don't know who gave them this name. The name is actually not easy to pronounce. Arin Invest. I think they were probably just to try to combat like African Invest or something like that. Arin Invest is something. It I don't know. What's it called now? Afrin Invest, yeah. Afrin Invest. I think it's better. Afrin Invest. Yeah, I can pronounce it better now. So it's all about learning how to convert uh, this information into power, right? So, like I said, you can use Iron Invest for investment, you can use Bamboo, you can use Zen Finance, you can use Bybit, you can use Binance, you can use BitMEX. Now, why should you use any of this platform? I'm going to be giving some information about that, right? So, why should you use Bamboo? If you want to invest in stock, like I mentioned yesterday, if you want to invest in stock, or you want to invest in you have different stocks and assets you want to buy. You want to invest in commercial papers. You want to invest in MMFs, which is money market funds. You should be on all these platforms. Offering Invest, Bamboo, and okay, there's something missing right now. There's Shaka. Yeah, you can use Shaka, you can use Bamboo, you can use Iron Invest. Those are like the three common and popular ones you can actually get to use for your stock investment and money market investment or stuff like that, or even investing in bonds. Yeah, you can get them on those platforms. Especially if you're in Nigeria and you want to invest, because I'm actually saying this for Nigerians. Basically, this platform are majorly available for Nigerians. I think Zen Finance is global, but Zen Finance is actually crypto related. So if you have a crypto asset like which is one of the things I mentioned, I'm going to be deciphering why investing in Naira, let's say if you're buying, if you are a long-term low risk investor, it is kind of currently it is more profitable to invest in Nigeria than investing in US. I'm going to break down that to you right now. How we're going to do that. In our next slide, we're going to get to that. How you can actually invest in how to switch your investment. Basically, by investing in Nigeria, give you more profits than investing in US. You might find it mind blowing, but those are things I've explored, and those are I'm going to show you the result here. So we have different ways to invest. One of the things you need to understand is fundamental analysis, right? Before I leave this slide. So I said something here. Your earning goals determines the platform and asset you invest in. So what is your earning goal? And your earning goals decide your risk appetite. Are you a high risk trader? Are you going for what's it called now? Are you a volatile high risk investment? Do you want high risk investment? Do you want medium risk investment, or do you want low risk investment? So, like I said, bonds, securities, and stock is not low risk. Stocks are possibly medium risk. We have some stocks that are low risk anyway. So we have stocks. We have money market funds. Money market funds is actually more like a guaranteed low risk investment, and it has to be long term for you to actually benefit from it. So, say you have $10,000 you want to invest. Where should you put it in? We discussed it yesterday. The profit margin between what the potential you can make as a long term investor, and the potential you can make as a short term investor that has been an active trader. We discussed that yesterday. So I'm not going to be going back to that. If you want to get information about that, go and watch our yesterday's video, our day one video, right? So, like I said, we this is it, right? So I'm talking about money market fund here, and why should you invest in Nigeria? So this is an example of investment in Nigeria. So say a 10 you have 10 million naira as a Nigerian, right? You have 10 million naira, and you are low risk. You want to expose yourself to a low risk investment. Like I said, what you want to make, or your decision, or your intention on what you want to make will decide the asset and the platform you invest in. So I'm a Nigerian, and I have 10 million naira, and I want to make at least about 20% within a year. APY, right? I mostly would go into platforms like uh, Bamboo, uh, Afrain Invest, Zen Finance, and several other ones. Now, comparing why investing in Nigeria is more profitable than why investing in US. From my research, the highest return I've seen, the highest API I've seen in US market is 7%, in US money market fund and stuff like that, or static investment, even in USDT, the highest I've seen is 7%. That is, ten, if you have 10 million naira at a conversion rate of, let's say, 550 naira per dollar, that'll give you about $6,451. So if you have $6,141, you're going to be getting 7% returns on it. That is the highest. Most money market fund in the US are probably just giving about 4.35%. I mean, that's the highest I've seen. There might be more, but based on the lowest and the highest I've seen, that's why I'm doing this analysis. So if you have 10 million naira and you invest in US dollar money market funds, you're going to get four. What did I do here? Okay. There's an error here. There's an error here. There's an error here. I'm seeing my chart right now. But yeah. So the returns you're going to get, right, is about, come in. Let me just plot in what I did here. Yes, okay. I'm correct. I'm right. I'm right. I'm correct. I'm right. I'm right. I'm correct. I'm correct. I'm correct. I'm correct. I'm fine. It's fine. Okay, it's valid. I was thinking the math is wrong. So if you have 10 million naira and let's say at the conversion, most people, like, let's say in January, about a year ago, right? Dollar was trading at about 1,005. Yes, about a year ago, like 1,004, 1,005, even got up to $1,600. So say you have 10 million naira and you converted it to dollars and you got 6,451 6,461.61 cents. At the end of the year, at 7%, which is like the highest, you're going to be getting 451.61 cents. $461.61 at the end of the year in return. That is like guaranteed static in return. So let's say dollar went from 150 that from 1,550 to 1,620. That is a growth of about 100, about no. That's a growth about 70 naira between the time you bought, the time you converted your naira to USD, and the time you're converting your USD back to naira. You're going to the profit you're making at the end of the year on 70% is about 7.612 and 9 kobo. That is what you're making. But say you invest in Nigeria money market fund, I'm going to be telling you where you can. I already explained where you can get them. I'm going to be re-emphasizing them. So you have 10 million naira and invest. You don't have anything to do with it, and you just want to put it into the market, and you put it into, say, convert it into CNGN. That is the Nigeria stable. Is like the first Nigeria regulated stable coin. If you convert it to CNGN and you put that CNGN on platform like say Zen Finance, or platform, or most platform actually yield that give you interest. Most money market fund investment yield on CNG right now is between 20 to 21, some 22%. I mean 21.85 or something like that. So already about 20%. So let's say about 20%, you're getting 20% APR. That is annually. 20 naira per annum on 10 million naira would give you two 2.1. Wait. Yeah, that would give you 2.1 million naira. So this is Nigeria. This is you investing in Nigeria. At the end of the year, now don't forget that you actually have made the rate at which you convert then was different from the rate at which you're converting right now. That is, the rate has even increased. So let's say if you had, say you bought at 1,150 and 1,550 and you convert back at 1,550 or sometimes even lower, because forex can even go lower. As at last week, dollars were trading at 1,600. Now it's currently trading at 1,530 as 1,530 thereabout currently, right? So which has actually gone lower. So investing in US will have given you less than what you have gained investing in Nigeria. And look at the value, look at the margin. The margin is like up to over 2x of returns in just investing in Naira. So, like I said, this is more or less we have very important people in the community, and this information is basically an advocate for you to go get a CNGN, invest into CNGN, convert it into money market fund, and just hold your capital. You're going to make more than it, because sometimes if you trade, you can end up losing all the money. You're probably losing less, making less than that at the end of the year. It's possible. But let's say you have a static and low risk guaranteed mode of investment. Put it in money market fund, put it in stocks, put it in bonds. You're going to get way more out of it at the end of the year. That is, if you have the money, you're not using, right? That's what you can do with it. So, and these are actually the basic potential for uh, static investment, low risk static investment, a static return. So let's go to volatile return. So this is for crypto. And I did this analysis based on results and the results we've been able to get using STIC, right? The performance, monthly performance of STIC and thereabouts, right? So, and sometimes there are some volatility on the market, and some of the values you see here are mostly assumed, but very, very closely related to the actual figure, what you can actually get. So this is for crypto as I say you venture into crypto, into trading. So don't forget you have a static 20% return, but for a volatile return, you can actually make up to what? 177% ROI. That's like 77% return at the end of the year. So let's say in your first month you made 4%, your second month you were like negative, it was like less than 100%. That's like minus 2%. In your third month, you make 7%, 15%, 10%, 9%. Then 6 months was lower, you had a major loss in the 6 months. Then the seventh month, you may feel 5%, 10%, and thereabouts. Cumulatively, you will have made about 100 some percent. So those are like what the potential of trading. Those are like what you get. That is, and this is only valid for people that are professional in trading. And for you to be able to say you want to achieve this level of returns, this level of more like guaranteed returns, you need to understand the market. You need to know how to trade properly. And which is one of the things STIC has given you. STIC has given you the edge to be able to know how to trade properly, right? And what are the advantage of STIC? What do you get from STIC? What are the things STIC give you? So STIC basically help you improve. One of the major mistakes traders make in trading is, uh, oh, I didn't finish the slide. Anyway, my goal, right, is actually to show you the STIC. Anyway, so one of the things STIC stands for Smart Trading and Investment Companion, and it's help you remove emotion bias when it comes to trading. So I lost last year. I lost about there was a day I lost $10,000, and what made me lose that money was basically because I already put a stop loss. Like I was supposed to lose was just 2% of my just uh 2K that period. But because of the sentiment and because of emotions, I thought the market will not get to this region, it will bounce back. I adjusted my stop loss. So something I'm supposed to have a trade I'm supposed to have lost about 2K, I ended up losing about 10K in total, which is which is not a very bad decision. And one of the things you mistake we made in trading is probably adjusting your stop loss. And this is based on emotions. And like I said, if you check the charts, you go to chart right now, you're going to see the greens. You're going to see currently, if you're using STIC, you're going to see blue and yellow, the blue and yellow candle color. The blue represents the bullish trend, why the the blue represents bullish, that is buy, why the yellow represents sell sentiment, that is sell sentiment. Anyway, if I disable this right now, you should be able to see uh, the normal candle color. So on your chart, this is the first thing you're going to see, the greens and the red. And I've always said this, the green candles and the red candles you see on the chart basically represent emotions, human emotion. That's the implication. Defines what people are thinking, what the market is thinking, what institutional investors are thinking. And if you're able to read human emotion, if you can understand the emotion and you can read the emotions, you understand the implication of the emotions. That is why thinker analysis is actually the groundbreaking basics for trading. If you can understand the human emotion, then that can help you make better decisions in terms of what to buy, where to place your entry, where to place your stop loss. Actually, this trade, yes, I'm going to. This trade was the entry was around here. I'm going to give insights on why it was there because we're going to be talking a bit about basics about chart today. So, like I said, the green represents bullish candles, and bullish means buy. So green means a lot of buyers, people are buying, which also stands for bullish. Why red means people are selling, which also stands for bearish. So the bull and the bear. I think for those, if you're just hearing that for the first time, just search the meaning. Bull, if you hear bullish or bull, it means buy. If you hear bearish or bear or short, it means sell. So short means sell, long means buy. That is basically the feature of forex trading. So like I said, those are like one of the advantages you get from STIC. It helps you understand the market, help you avoid emotional bias, and give you the right directional bias. That is where the market is going. Predict the direction of the market and tell you where the market is going, and you can make your informed decision and take the trades where it's supposed to go. Then show you a clear confluence-based signal. That is, like I said, STICs it's analyzed into liquidity, market news, sentiment, and liquidity size, volume, and several other tools that it has been have already coded into it, into ensuring that the algorithm read the market and it can predict on multiple time frames. So working on about 7 different time frames, analyzing what is happening on different time zones, and give you insight on the direction of the market. That is what STIC does. And also, it also detects liquidity sweep, reversal regions, and breakouts. Also, you get the entry price, you get the stop loss, you get the target, that is your which you can actually adjust yourself. you get a target, the TP price, and it keep you consistent in with your emotion. And that is one of the things you want to do in trade. When it comes to trading, you want to ensure that you have a balanced emotion. And like I said yesterday, once you lose your emotional bias, when you lose your emotional stability, the next thing you want to do is take a break, just move away from the market. Now, using stick, that helps you level out your emotions. If you say stick says buy and you buy, just leave it. Wait for the next. Either wait for it to hit your TP and wait for it to reverse. I'm going to be showing you how that works right now. So, like I said, we talked about trading view yesterday. If as a trader or as an investor, if you're trading stock, you're trading crypto, you're trading forex, you should have trading view. You can create a free account. The link is in our Telegram community. Let me check. The link should have been dropped in our Telegram community by now. Okay, not yet there. I'm going to add it. Actually, if you check in the group description, yeah, you're going to also have, you can get it there. So if you check our Telegram community right now, that is search for Smart Analyst Global in the in the, in this video description, you're going to have access to it. So as I mentioned, if you go to you're going to see get access to Zen Finance, investment by Bamboo, by Chaka, by Bybit, Binance, BitMEX, and Afrin Invest. Afrain Invest. That's something. The name is not smooth to pronounce. I don't know why they get that name. Anyway, I like smooth names. Afrain Invest. That's not bad. So you want to, like I said, the TradingView gives you access to stocks. So you can see different stock like Nvidia. Say you want to buy Nvidia, or you want to buy Tesla stock. So you can see Tesla stock. That's TSLA. It can give you access to analyze the Tesla stock on Nasdaq or whichever different market you want to analyze it on. Currently on 5 minute time frame. And one other thing is if you're trading stock, right, and you are in long time, also going to be talking about time frame, right? And I mentioned it yesterday. I'm going to repeat to myself about the time frame you should trade. So most people, one of the challenge a trader also have is the time frame. And what time frame should I trade on? What's the best time frame to trade on? So if you're, like I said, if you're a scalp trader, like so you're a day trader, and you want to make profit within 24 hours, you should do your analysis and pick your trade on either 5 minute time frame or 15 minutes time frame, right? And if you are a, excuse me, on 5 minute time frame or 15 minute time frame. So if you want, and that's if you want to take your profit within say 4 hours to 24 hours. You want to take your profit within, say 3 days, you should do analysis on 15. I mean, pick your entry, not analysis basically. Pick your entry on 15 minutes time frame to say 1 hour time frame. You want to take your profit in, say you don't have time, you want to take your profit in 1 week, you should pick your entry on 4 hour time frame. That is this time frame. Analyze and pick your entry on 4 hour time frame. If you're probably trading for 6 months, 1 month, 1 year, long term, then you should be doing your analysis. Pick your entry on 4 hours is fine. Pick your entry on 12 hours is fine. Pick your entry on 24 hours is also fine. Okay, those are things you need to put into consideration when it comes to trading. So, like I said, currently I've not enabled stick on this chart. I'm going to enable stick and see. You're going to see the implication and the effect on the market, right? You're going to see how stick predicts direction and how it tells you where to buy and where to sell. I've actually analyzed what's it called? Tesla. I don't normally trade Tesla on short term, so I don't even analyze a 5 minute time frame. But anyway, so if you go to our Telegram community right now, which I already dropped the link, you see the link on how to create your free investment and trading platform. Create a free account there and you can set it up. Then for TradingView, once you create the first thing to get access to Stick, yeah, I think let's talk about Stick now before we go to TradingView. If you already have a TradingView account, if you don't have one, check the description to get access to it. If you already have one, then go to cryptosmartanalyst.com to get we're going to get access to Stick. Go to cryptosmartanalyst.com, go to trading tools, right? Go to trading tools, which is Stick is going to take you to the Stick page. So on that Stick page, click on get started. Click on get started. It's going to take you to uh, where you create your account. So you come to the sign up page and enter your TradingView account, your TradingView username. Basically, the reason why we're asking for that is for you to be able to get access to the tool on TradingView, because it's access only to you need to actually be granted access. We need to give access to you manually, right? So you need to provide your TradingView username, submit your email, create a password. If you have a referral code, enter a referral code and create an account. And once that is done, by default, you get 7-day free access. But for this free training, I already said we're going to be giving 30 days free access. Everybody's going to be getting 30 days free access. So if you want to benefit from it, ensure that you are in our Telegram community. Let me show you our Telegram community right now so that you can get access to it. So ensure you are in our Telegram community if you want to get access to. Okay, good. Ensure you're in our Telegram community if you want to get access to STIC. So we have the STIC community. We have the STIC community for STIC user. Then we have the Smart Analyst. There's a masterclass. We have the Smart Analyst global channel, and we have the community where you can type a message and ask questions and give responses. But so that's how you can get access to that. So if you haven't, once you create your account, you're going to be getting 30 days access to it. Now, if you, after creating your CryptoSmart Analyst account and you've not gotten your access, please just drop a message either in the STIC community or in our Wheel Tracker community and just drop a message there. You're going to get response and you get our moderators to respond to you, basically by giving you access to it, right? So that is very, very important. So like I said, everybody's going to be getting free access to using this platform. Okay, awesome. Okay. Just want to check that I'm not missing any message. Good. So that is, once you get access to it, how do you add it to your charts? So you come to Trading View, you click on indicator. After coming to your Trading View, you come to Trading View. If you're okay, let's just go back to how you're going to see Trading View when you come in here, right? So most times, once you go to tradingview.com, you're going to see this page. You're going to see this page, right? So what you want to do is click on products. You see super chat. Click on products. Just click on the super chat. Once you click on product, click on super chat. It's going to take me back to. Oh, what did I click on? Click on screen. Okay, these are tools. These are tools on how you can actually analyze the market anyway. So, but we're not going into that today. We're going to super chat. So going to super chat takes me back to my chart. And like I said, what do you want to do? You want to add STIC to your chart. So click on indicator, type STIC algo, STICAL space ALGO, STIC algo. You're going to see it in the community. This is the STIC algo. You're going to see it as STIC bullish and bearish hunter. Click on it once, just once. If you click it multiple times, it's going to get added to your chart multiple times. So click on it once and you can close the tab. It's going to load your page. It's going to load your chart. I don't know why it's not doing that right now. So I'm just enable it from here. So it's going to load your chart and you can see this. So this is, like I said, this is STIC. You're going to see it appear on your chart just like this. Once you see it, this is, like, let me just zoom in so that you can see the STIC working. Like if you even trading, if you're trading Tesla on a lower time frame. So let's say you scalp trading Tesla stock. So this is STIC at work, giving you entry price. You can see the entry price here, giving you your entry price. And one of the things you get from STIC is going to give you the price to buy. That is, you can see this sell sentiment carries your E1, which is, you can zoom in into your screen. I'm trying to zoom in right now, but that doesn't seem to happen, right? So you see your sell sentiment. Once you get this red label, sell sentiment, it's going to come with E1, which is your entry one price, your stop loss price, and your take profit price. So that take profit price, you can adjust it to anything you want. Okay, you can adjust the take profit price to anything you want. By default, if you go to the settings, by default, your partial TP, your take profit price, is set at 1.5 risk reward ratio. That basically means that what that means is if you're risking $100, by the time the market, once you get 1.5 means that at $150, it's going to tell you take profit. And that is what you can see here, right? This line, this blue line. If you see the red line above is for stop loss, this is your entry, and the blue line below is your take profit. That is at 150%, which is 1.5 risk reward ratio. That's 150% ROI, not that is 50% profit. It's going to tell you to take profit and or probably take partial profit, up to you. You can increase it, you can adjust it to 2RR. I have traders that actually prefer to use 2RR. So just increase it to 2, type 2, and that is it. This blue line is going to adjust. It's going to adjust downward. So let's see. It should move downward. Okay, that's it. It has moved. So you can see it here. It has moved downward. So by default, it's as 5RR. But so if you put it to 2RR, that means you're not going to take profit until the market eats here. So and the market eventually end up eating here. So you can see STIC already indicated sell, tell you where to take your profits, tell you where to put your entry price and where to put your stop loss. So once you after for those that are just creating their accounts, I'm going to be giving access after this class. But for those that already are probably in a STIC community and have created their accounts right before now, we're going to activate the account and you can get access to it. Okay, I think that's one of the things I should do, giving access to trading TV. Okay, so that analyze, like I said, it analyzes the market, tell you where the market, they give you session breaks, give you buy and sell direction, gives you let me zoom in. It gives you where the liquidity resides. It's going to give you order blocks. Those are things you get. It gives you when the market is at extreme, volatility extreme. You can see volatility extreme alert here. That is when market gets to an extreme. It's going to give you volatility extreme alert, saying the market is actually potentially going to bounce back. And most times, whenever I give that, especially on the hour time frame, the market tends to either consolidate or bounce back. And you can see the market bounced back up and the market came back again extreme, bounced back up, and the market is going down. It's still bearish. And this actually happened, a few days ago. And you can see volatility extreme here, and the market tends to rebound. And now we've gotten a buy signal on, we've gotten a first buy signal on Tesla, right? So mostly one of the things I always say, right, it is not about, I even mentioned yesterday, right, is that it's not about what the asset you like. Oh, I have a sentiment about it, asset. It's about the liquidity in that asset. If an asset has a liquidity and has volatility, has enough volume, then it's a better asset to trade than you say you want to trade a very volatile asset. A very volatile, you can trade a very volatile asset, but it's an advantage that is you have a potential of actually losing faster and you can get liquidated quickly. So it's best to trade an asset that actually have liquidity, have good sentiment, and people are behind it. So that's like one of the things you want to know. So I don't want to spend too much time on our trading class today, and so we're going to be diving in details about how to use STIC. So like I said, it is so simple. It's before now, you probably would take about 10 minutes, 20 minutes to analyze the market. And how will I analyze the market? Before now, I have to go to check 24-hour time frame. What is happening on 24-hour time frame? And what's the market bias? Is it bullish or bearish? I'm basically just giving indication on how to analyze the market, right? So you go on 24-hour time frame, check out what is happening in the market. Is it bullish or bearish? Where does the liquidity reside, right? Let me disable STIC. Then the next thing you go on, say 12 hours time frame, look at what is happening there. Go on 4 hour time frame, look at what is happening there. You go on 1 hour time frame. Checking all the time frames to now get to, and all I want to do is to take a trade, just a single trade in the A. Like I said, it's very, very important to know how to analyze the market, right? So analyzing from 1 hour time frame to now do my analysis bias from 15-minute time frame and probably pick an entry on 5-minute time frame or 15-minute time frame, right? And allow the market to now go in my direction and wait for the market to go. But that is going to take me about sometimes 20 minutes, sometimes 10 minutes, sometimes 1 hour for you to actually be able to get all those information. And the more you practice, the faster you become. But with STIC, what that's done for you is you just go to the time frame you want to pick your entry. So I want to trade on 24-hour time frame. I want to take an entry, take profits within 24 hours. Then what shall I do? I go to the time frame, which is 5 minute time frame, and check out what STIC is telling me on 5 minutes time frame. Is it bullish or bearish? I think this has been bullish and it's still holding, right? Still holding. Okay, sorry. So you have to, yeah, you have to go to early time frames. And one of the things I think you should also note, right, is the performance at consolidation, right? The performance at consolidation can be very, very choppy, like what we see here. So that is one of the things I said yesterday. Like, if you want to become a very profitable trader, you need to have a risk management strategy. And which brings me to what I said about your the number of trade you should take per day. What number of trade should you be taking per day? Say you're taking just 3 trades. One of my favorite assets is actually Solana. So I've been trading Solana for the past this 6 months now, just focusing on Solana trading alone. And it has been the performance is cool. I like it, right? So let me just go to the latest update. So trading Solana, this is actually, I've removed the noise on the chart, and that is why I'm going to this chart. So trading Solana, STIC already analyzed the market, gives me entry on where to buy, right? Give me the buy entry. And what do you do? I think I needed to talk about this because I was having a session with somebody and he doesn't really understand how to pick the entry. The first thing, before now, we don't have the what's it called? The projection tool. So whenever you get an alert on STIC that you should get, this is sell alert on STIC, what do you want to do? You come to your projection tool. So current is the short, select short, then place your entry at the entry price that STIC is giving you. Then move to stop loss to where STIC is saying your stop loss should be, and you can move your target to where STIC is saying your target should be. So next, how do you determine what you should risk? Remember yesterday I said you should not risk more than 10% of your capital. And how do you determine risking not more than 10% of your capital? You go to the settings of this projection tool. Say my capital is $100,000, and you're going to put your lot size to 1, and you put your risks to what? 2%, or say 1%. And what that is going to do for you is that it's going to plot. So you can put it to either USDT or percentage. So I prefer percentage, and you don't need to do any other thing here. You can either enter the entry price that STIC is giving you. What that is going to do for you is actually going to be help you plot your quantity of your capital. So it's basically saying that the quantity is setting here is the amount of Solana I should buy, not the amount of dollars I should buy. The quantity you're seeing here is 727 Solana. That is, if I'm having $100,000 and I am risking, and like I said, let's say I'm on cross margin, I should be risking 2%, and I'm risking 2% of my capital at the based on my risk margin, which is my entry to my stop loss, your entry price to your stop loss. You place seven. Okay, my adjustment we adjusted to 743 Solana. So I bought 743 Solana, and that is going to be worthing about two. Is good probably if you're doing the adjustment, like I said, based on the capital you have in your account. See, right now I'm using a scenario of $100,000. You placed Solana short, and I can place a short from here. You can actually, we are going to start, we're going to do live trading in our, I think, fourth day. Yeah, we're going to do live trading fourth day. So you can actually get to explore how to do that and how to place trades on probably Bybit and stuff like that. So create your account, then come to the community if you have any question. So like I said, you have $100,000. The quantity is 743 Solana you should buy, not USDT. Solana you should buy. And when you place that Solana trade, you place your stop loss and you place your target. And basically what that means is if if you are doing that adjustment, if you're checking your probably Binance, you will see that it is more than, sometimes it will be more than 2% of your capital. But like I said, what you're risking is 2% based on this stop loss. That is, if you enter 743 Solana, if the market come back and hits your stop loss at this price, you're only going to be losing 2% of your 100K. Okay. And if the market continue going, you're only going to uh, continue going and it hits your 1.5 RR, risk reward ratio. You're going to be making how much? That is 2% of 100K is actually that's $2,000, right? So at 1.5 RR, that'll be $1,000. At 2 RR, which is 200%, that'll be 200% ROI. That'll be $2,000. Okay, that is basically sorry. That what am I saying? At 1.5 RR, yeah, at 1.5 RR, that'll be $2,000. What am I calculating? Your risk is what's wrong with me? Sorry, I'm a bit distracted. Yeah, at 1,000, risking 2% of the capital of 100K, that's $2,000. At 1.5 RR, you're going to be making $1,000 in profit, and at 2 RR, you're going to be making back $2,000 in profit. So that's basically how it works. So you get your entry, you get your stop loss, you get your TP, and you leave the market to run. If you market hits your stop loss, just wait for the next entry before you go. Like what happened here, okay, I think we had these are trade we actually have done. So you can see here, most times when you see me post partial profit and full TP, this is what it means, right? STIC actually give it this is when it hits this TP, that is full TP. When this one, you can see this is a sell. This sell did not hit my target before the market reversed, but it closed. This is my entry. It closed here, and this is a partial entry. This one is a full TP. This is a partial TP, and this one end up hitting my tip target, which makes it what a full TP. So the market can actually reverse. Market sometimes the market can consolidate. The performance of STIC can be is limited when the market actually consolidates. Like that's one of the minor limitations, right? When the market consolidates, like issues like here, if you go on 15 minutes time frame, you realize that the market is actually this is fake out, but that wasn't missed up by fix because and the reason why stick is not plotting uh, bullish inducement right now is because I have increased my bullish inducement threshold on stick. So I think it's currently at a bullish inducement threshold is at 58. No, is at 40. Yes, I've increased to 40. If I reduce the price, it's going to actually, as it will have detected this as a bullish inducement and it's not enter for me. What's that? So it's not going to place an entry for me. So those are the features you actually get from stake. You get bullish inducement. That is, if you have a fake out, the market is going to jump in. I mean, a pump and dump, you get bullish inducement. If you have a pump and dump signal, you get volatility extremes. So those are like the things stake help you to do. Help you analyze the market for you, so you don't even have to do anything, and it help you pick the right directions, and help you follow through. Like this one, we actually currently in this trade is running. I think let me switch to mobile. You can see our screen on mobile. Yes. Okay. Yeah. $2,000. Yes. That'll be $3,000. The $3,000 is your total profit. Yeah. I see 1.5 RR of $2,000 should be $3,000. Yeah. That'll be $3,000 ROI. Yeah. In profit. But what I was talking about the profit, which is just $8,000 profit. Yes. So back to what I was saying about screen. Okay. So like I was saying, you get to place all this entry on your chart. So this is actually an entry that's been running. Everything you see on the chart, on the previous chart, which was the buy, you can see the buy sentiment here. This was the buy alert from stick, and this was the sell region. This was partial TP, and it sold here, and now you got another buy. You got another buy here, and you got a TP here. Before the market reversed, you can see it took the full TP was sold here. That is this S you're seeing. The full TP was sold here, then there was an inducement here before the market reversed downward. Okay, that's this inducement. This current chart, exactly this trade, this the what you saw on this. what you're seeing here, what you see happen here is currently what you're seeing on my chart. So I got the alert on trading view, and I executed the trade and I followed the direction. So this was the inducement I was talking about. I actually got induced and got stopped. I got stopped out. It did not hit my stop loss, then I got stopped out and I reversed and followed the trend downward. And currently the market is still following the trend, waiting for the market to either reverse or continue downtrend. So I still feel the market is bullish. We have about 4 months, less than 4 months, about 4 months left to the end of the bull run, and which is one of the reasons why I'm actually taking this class for everybody to understand what to do, when to take profit, what to trade, because a lot of people are making money in the bull run. Less people are going to be making money in the bear market, and when the bear market kicks in, your it's only people that probably trade futures that or trade forex that are going to be making money because they can make money in both directions. The market is going up or going down, they can make money. And that's like one of the reasons why using stick gives you an edge, right? So this is like the trade that was running. I think I already showed that on a mobile. So this is the trade running, and that's just stick running for you. So I think we actually have spent about an hour here already. So I know we might have questions. If you have any question, please go to our Telegram community or drop it in the chat section. Let me check that if I have messages, comments, or questions. Drop it in the message section, right? Or drop it in the description section in the comment section of this video, or drop it in our Telegram community, right? Like I said, create a free account on cryptoanalyst.com and go to your TradingView account and add stick. If you've not gotten access to stick, it's going to show a red padlock, I think. Yes, it's going to show a red padlock if you don't have access to stick. But if you have access to stick, it's going to turn to green. It's going to turn to green. The padlock is going to turn to green. So that's basically how to use stick, how to analyze trade and pick trade. Now, another thing we're going to be talking about tomorrow is smart money movement, which is why I mentioned this. Let me just disable stick here, which is why I mentioned it. The smart money movement is basically what stick indicates that is if I don't want to use the entry plot for stick, you can disable it in the chat section, right? And one of the things I want to get with stick is when the market reverse and change direction. So right now the market, let's say if I'm going on my medium time frame, you can use anything frame and market shifted bearish and you want to take the direction of the market. So how should you place your entry? You can see I've gotten a change of character on my medium time frame, and what I'm looking for is uh, my entry. So placing my entry, you can either use fair value gap. Stick actually indicates those fair value gaps. And like I said, this is I'm basically placing my entry at the mid of the fair value gap. My stop loss a bit above the last higher high, the highest price of the market, and I'm waiting for the market to come back. So say you place an entry here. Let me do a replay. What happened and when it happened. Okay, so you have a change of character. The market broke structure, right? Which has been indicated by stick. The market broke structure, right? And like I said, I've done multiple analysis before I got to this. I've done multi time frame analysis before I got to this. But on my directional bias time frame, the market has shifted bearish. And when the market shifted bearish, then it indicated what a fair value gap. And looking at the fair value gap, I just placed my entry at the middle of the fair value gap. One, you can use the fair value gap or you can use the Fibonacci retracement tool. So how do you use that? You place it from the top and place it below, and you can either enter as probably 23.6% or 38.3% or 50%. Depends on you. So you want to place, for me, I mostly just use 50% or less than that because sometimes the market might not end up coming back that high. So you can either use your Fibonacci retracement or you can use the fair value gap, which is this. So you get a fair value gap plot and the market keep going. I place my entry. I'm waiting for the market to continue, and my target is what? 2RR. So without using stick entry plot, like I said, you can decide not to use the stick entry plot. You can decide to use the entry plot you want for yourself, right? So you can just use stick So let's say you don't want to use the enterprise, you can use STIC for to identify the liquidity zones. Like let me enable the liquidity zones. So you can see show institutional liquidity zone. So I'm showing institutional liquidity zone here. Enable it. So it's going to show on your chart. You're going to see it on the chart. Still loading. Good. So you can see the market actually bounced back, picked my entry, and went down to eat my 2RR. You can see I'm currently on 2.14 risk reward ratio, hit my 2RR, and the market before the market actually now continue and bounce back. So with this, I've taken, I could say I'll take my first trade of the day and I'm out. And like I said, you take 3 trades per day and you leave the rest to run. I mean, take 3 trades per day. If your first trade is a win, take your profit and walk away. If your second trade is a win, come back and try again. If your second trade is a loss, if your second trade is a win, your first trade is a loss and your second trade is a win, then you're breaking even and you're not in profit. But if your first trade is a loss, your second trade is a loss, and your third trade is a win, then you've broken even already. Just with 2RR, you're already broken even and you can walk away. But if your first, second, and third trade is a loss, just take a break, come back the next day and realize the market. That's like the best way to control your emotions. Okay. So with that, I took my one of the things I do is I take my partial profit and I leave the rest to run. That's actually how to do your trading, basically. Take partial profits, leave the rest to run. Okay. So let's stop sharing. Let's stop doing that. So if you have any question, you have any comments about how to use STIC, or you do not understand it, please ask in our Telegram community. If you have created your account and you're here to have access to the indicator, right, on TradingView, please drop a message in our STIC community on Telegram, right? Drop a message in our STIC community on Telegram, and we're going to respond to them quickly. Okay, what is it? Drop a message there and you're going to get access to use STIC. Okay, that's basically it. And like I said, doing those analysis and if you're not, trading is not for everyone. You're not interested in trading, you can just buy you can just buy an asset and invest into it for long term and you're good to go. Okay, and how do you do that? Analyze yourself. Probably you're a low risk investor. Go to your low risk portfolio and go to Bamboo, go to Chaka, go to Zen Finance, go to Afrin Invest. Mostly as a Nigerian, I'm actually giving this insight for Nigerians, right? Go to Afrin Invest as a Nigerian, and you can invest. Like these are like the potential. With say you have CNGN as the crypto asset, which is just CNGN is a stable coin, and it doesn't devaluate. It's equal to 1 naira. One CNGN equals to 1 naira. Okay, so you have a CNGN and you invest in MMF, which is money market funds, and you're getting about 20% annually. It outperform converting that same naira into dollars and investing it in a US MMF, or probably investing in US, sometimes some US fixed asset return. Because mostly the highest I've seen is about between 4.35% to 7%. As I've seen, I saw today was like 7%. Okay, and Nigerian markets doing the conversion, looking at exchange rate and looking at even with exchange rate increments, you can actually make more profit investing in Nigeria, investing in Naira, than investing in US. That's just what it is. That's the truth. Okay, so most people get sentimental and they really don't do the deeper calculation to see the returns they can actually have by say, oh, I want to hold dollars and I'll convert it to naira. But yes, if you hold that naira and now leave it to convert, let's say you actually do the manipulation and I convert it later with some profit. This is actually with some profit. What you're going to get at the end of the year, even if you say you have 2% increase, is going to be lesser than what you would have gotten investing in naira. And like I said, if you want to invest, you want to pick an asset. Your decision is either to grow in naira market or grow in dollars market. Like say I invest in naira and I've gotten 2.1 million naira at the end of the year, I can convert this 2.1 million naira into dollars and now switch it back into my. So you want to look at the most performing assets, the best performing assets, right? And from there you want to pick the asset you want to grow. which of your asset do you want to grow? Do you want to grow? Do you have Naira? You want to grow your Naira? You have dollars? You want to grow your dollars? So that determine which market you invest. That will determine which platform you invest, and that will determine which asset you buy. Okay. So that is the details I want to share today. If you have any questions, if you have uh, any questions, any feedback, please drop it in our Telegram community or in the description video of our YouTube channel. And if you're on Facebook, I think yes, we're actually streaming to Facebook right now. You can also drop me a message on Facebook. I'll respond to that personally, right? So that is it. If you have any question, feel free to ask, and don't forget to trade smartly. Enjoy the rest of your day. Money, sorry, just the rest of your day. I think in the crypto market we say GM. GM basically either you're in the morning,